It is. I mean, we have taken up our forecast for U.S. growth over the last couple of weeks by 1 full percentage point. And you can see from the Fed, too, the revisions they did upwards on higher growth and also a higher neutral rate. So, I mean, we are looking at growth right now in the U.S. that is, trending above potential. But I do think, though, that the Fed is still, the 3 cuts, I mean, that's very much what we have in our forecast as well, starting mid-year. And I think around the globe, you're also going to see that you have a developed market easing cycle that's beginning, but I think it's going to be pretty shallow here.
I mean, what I found unbelievably fascinating is the market reaction. And it's gone from desperation for 150 basis points. We need 150 basis points. We're going to throw our toys out the pram if we don't. To, thank goodness we're still getting 75. So they've gone full circle to not believing the Fed is ahead of the game to thinking, thank goodness the Fed is staying the course.
Well, one of the things you have to really look at is just the easy financial market conditions. So, I mean, we've taken up our forecast by about 10%. We see high-grade corporate bond issuance hitting $1.3 trillion. I mean, you've already had $462 billion year to date. So the fact that, you've had these corporate bond sales and the financing conditions so easy, I think, has made people feel that, do you need that many cuts right now when you actually look at what's happening in the marketplace? And you still have a lot of demand for private credit. I mean, frankly, it almost looks like there's more cash than assets that are even available. So I think, that does, we haven't even talked about inflation, but I think that Powell's comments also made it very clear that he isn't that worried about the January, February pop, that he basically says that, the story is essentially unchanged. So, so even though you had some more hawkish revisions on the growth outlook, the message on inflation was that it's still probably, still on course for June to start the easing cycle, but a shallow one. A shallow easing cycle.
The first 2 months of the year, he seems to be indicating could be a bump in the road. So we just have to get through what could be a little bit of noise on the data. That said, to push back against that narrative, we've still got very strong wages in the backdrop and we've still got very strong employment market. What point does that get in the way of the bump in the road narrative and become something a little bit more?
I mean, well, we are still seeing the phenomena around the globe that services inflation, is still well above where it was before the pandemic. So we're looking at 3% for core CPI. But I think, the one thing that was really underestimated in the U.S. was the immigration story. So, U.S. population is almost 6 million higher than it was, 2 years ago or so. And so, that has accounted for a lot of the increase in consumption, that when you see the, very low unemployment numbers as well. So I think you're absolutely right. We're looking at the wage pressures. We're also looking at a housing market that hasn't weakened, shelter inflation as well. And the other thing is that, you've seen a big move up in commodity prices and oil prices since December, up about, 15% since December. So I don't think we're out of the woods on inflation yet. I think it's too early to declare victory on that. But I think that they've made it very clear that they still feel that there is some scope to ease given the amount of hikes that had taken place.
Let's go down the road then around inflation, because that's the immigration story around inflation, because that's not a one-off, is it, when it comes to the imports here? The southern border issue still has not been fixed. And the people that have come across borders and are now looking for work, that simply is going to be a factor now for a number of years, isn't it?
Yeah, so I mean, look, the immigration, we didn't have it in our forecast, and very few people did, on how strong those numbers would be. But the, border crossings, alone have been around 2.5 million over the past year. And there are also other events to watch. I mean, one thing is just if you look at the situation in Haiti right now, there is some fears of mass migration that could result just from, the chaotic situation that is unfolding there. So you could continue to see that just, immigration, the border issues remain in the headlines in the U.S.
Joyce, actually, I'm going to follow on this one and get very political. So from an economic point of view, regardless of what Mr. Trump and Mr. Biden argue about immigration, which is one of the top 3 subjects that it will
absolutely.
be, it's maybe even top 1.
Yeah.
But it's a good thing for the U.S. economy, where it has, with a high handle 3, a low handle 4 unemployment rate. Extra immigration is a good thing economically for the United States at the moment.
Yes, I think so. I mean, I think...
I know that's hard for some of our viewers to take in if they're voting in a certain way, but it's a good thing, yeah?
It is a good thing. From everything we have seen, the revenues that are generated exceed the expenses. Now, it is a political issue, not just here in the U.S., but you look at Europe, it's also probably the #1 issue right now. But we do think that when you look at the unemployment numbers, the strength of consumption, I mean, the immigration was a big part of that. And I think the other thing in the U.S. was that makes it different from Europe was, the energy independence. Was another factor on why the U.S. exceptionalism, has endured. Yeah. But it's also the fiscal, the deficit in the U.S. was, 7.4% of GDP. Are we looking at numbers that going forward are going to be more like 6% of GDP on the fiscal side?
But whoever's the president, they're dreadful figures.
Yeah, no, and look, I think that also in an election year, you're going to see a lot of spending before September 30th as well. So there aren't really many signs that you're going to have, those numbers. I think that's one reason why I do think that higher for longer will be here to stay.